Okay, let's get going. As always, we stress this every year. There are changes made every year to the settlement instructions, and we do ask you to read through those. If you have any questions, feel free to contact us. Or if you see something that you think isn't exactly clear, we don't just ignore your comments. We actually look at them and say, okay, this isn't working. Let's come up with a better way to explain it, and we try to work through that for you. Now, all of you should have someone in your office that has access to the BMV FTP site. And once again, we're going to put all of your settlement forms out there. We've got instructions there on how to get to those. And there is a folder for you. There's a folder for the treasurer. And if the treasurer doesn't have access to the site, somebody there needs to get their documents and send them over to them. Please use the worksheets and forms we provide on the FTP site. Some of your software companies have created those forms and we've approved them, and if we have, that's fine to use their forms as well. We do check every time to verify that you're using the correct amount of local credits. And the correct amount is going to be the abstract amount minus what you distributed in June settlement. So that's pretty simple. And once again, we do check those. Be certain to make sure that your apportionment rates are correct in your system to distribute your property tax and excise tax. Those counties that have either of those situations for circuit breaker or operating levy freeze, we will contact you and ask you to send us 102 section A1 and B so we can plug that into our little cheat sheets that we use to verify and make sure that the correct rates were used. Yay, 2008 and prior delinquent worksheet, not required anymore. Omitted homestead, not required anymore. But if you do want those, you just give us a holler and we'll make sure we send the form to you, and instructions on those are out in the December settlement instruction. Excise tax. Now this is one form that you have to use our form that we'll have out there for you to do the excise tax allocation. For your cutoff dates, you're going to use the normal dates no matter when you do your December settlement. Kind of rushing through the settlement because all of this information is out on the instructions, but this particular slide deals with some issues that are common that we see a lot. Not really sure why, but for some reason when you print out your 102s out of your system, sometimes your abstract amounts, which are on lines 3, 4, 5, and 6 in section 1A, don't match what you actually submitted at abstract time. But when we go down and look at your line 37 and we check that against the treasurer's money, you're in balance with the treasurer. So what you need to do is make sure what you report to us on 3, 4, 5, and 6 are what's on the abstract. The difference you'll put as a line 7 adjustment, and somebody ought to be trying to discover why that changed. And then we'll need a letter that explains what that change was, signed by the county auditor. Any adjustment on line 7, we need an explanation. Now then, lines 39, 40, 41, and 42, please make sure that what you're entering on those lines match the description of what that should be. And the reason I say that is that we've noticed that some of the software, because this form has changed so much, the line numbers don't exactly match up. And I know there are times when Brenda and I are talking with you that you'll say, well, wait a minute, my line 46 says such and such. Well, that's just because the line numbers, the form had changed and maybe the software vendor didn't get it updated yet. So please check that really all the way through the form and make sure what you're reporting matches the description. Then on line 42, for other pre-apportionment adjustments, we're going to need a description. On our 105 form, we have the cell open. So you could type in a description. If you don't, we're going to ask you what's that adjustment for, okay? So just try to keep that in mind. It just makes checking your settlements a whole lot quicker. Tax refunds required for December settlement, but of course nothing that you've already taken out of June settlement. And always make sure on that 17TC form, there are proof columns for the PTRC and the homestead, and you want to make sure those are 0. Just do that before you even send it in. And typically all it means is that maybe you didn't put the breakdown on your homestead because it could be state, HEA, or any of the local credits. You guys are also serious. I just love that. Okay. We're still going to be doing the state, or the state and local PTRC recon worksheets and the homestead worksheets. You're going to include both of those, what you send back. Now, if you don't have any issues, you didn't have any refunds that affected PTRC, we don't really need the report, because I know that's the case for some counties. Then on the 105A form, this is another issue that happens a lot, and it's really like the last form that we check. That 105A form is only for the state portion, the state PTRC, the state homestead. What you report on there comes off of your recon worksheets in the column that says state. And I know that sometimes what we get, it's the total homestead or the total PTRC. This is just for the state portion only. And if you don't have any of those, you don't have to return that form. The county checklist, we know it's big, we know it's long, but if you use it, you can address any issues ahead of time, so when you send your settlement in, you're going to get a quick okay. Also, we're going to be checking the distribution rates again, like we have been, just to verify that someone didn't go in mid-season and change a rate. We hope that your systems don't allow that, but it's been known to happen. 49TC, there is a section the treasurer completes, and then they give the form to you. That's where they certify their collections. On the excise tax line, they're going to certify what is on their cash book at that time, the day that they certify. And if the treasurer has any questions on that, there is a section in the December settlement instructions that explains it, or they can call us at any time. And then your portion, you complete in section 1, columns A through 13, based on your information from the apportionment sheets. Section 2, that is the breakdown of any PTRC and homestead. And then the last section, section 3, that's where the treasurer should have put in those late payment penalties, okay? And once again, if you have questions on that, you can look in the December settlement manual, and that can help you. As most of you know, you need to settle within 51 days of your collection date. If not, you have to pay interest only on that portion of their distribution that they haven't already received. So if it looks like you're going to come close and you're going to miss your distribution date, we advise that you give an advance so that you're not paying as much interest, even though it's technically not money that the county's losing, because it's interest, it's based on the interest rate that the county's earning. So it sometimes sounds terrible. You think, oh, well, the county's having to pay this. Well, yes, you pay it, but it's based on money that the county earned. And we have had some issues, I don't want to say complaints, but some issues that some of the units say, well, settlement's been done for a while, it's been done for 30 days, and we still don't have our checks. And if you think about it, that is their money, and you need to try to get those checks out at a timely fashion, okay? Tammy's looking so serious down here. The remittances that are due to the state, for most counties, it's really probably going to only be the excise tax allocation money, because if you're not tracking 2008 and prior delinquent taxes, you don't have that to send in. And as years go by, there's going to be less and less state PTRC and homestead to come back. And of course, the fines and fees are due by December 31st. I know some of you have the form set up in your system, and that's fine, but we really request you either update your form or use our form, because it's got some additional information we need when we post those into the state's financial system. I'm not going to go over all the fines and fees. They're listed out there in the December settlement instructions, but please review those and make sure that what you're sending in is in fact only the state portion. And the form itself says November 30th balances. Well, thanks to technology, a lot of the treasurers are certifying to you really early, and we will actually have some settlements before the end of November. Then you can use the October 31 balance. That's absolutely fine. Now, you all have just been wonderful. We asked in June that you all email all three of us in the office, Dan, Brenda, and I, about sending in your settlements, and you all did that, and that was great, and I applaud you for that. It's really helpful. We hope to not have any more flat Brenda issues where somebody gets has an issue and can't be in the office for a week. No more of that, Brenda. Okay, omitted and undervalued assessments. The IC code reads, IC 61.1-36-12A states a Board of County Commissioners, a county assessor, or an elected township assessor may enter into a properly approved contract for the discovery of property that has been undervalued or omitted from assessment. This is dealing mainly with not mainly, all with personal property. And sometimes in the past we referred to it as TMAs, because there is a company called TMA that a lot of the counties have contracted with, and they basically review with your taxpayers to make sure that their personal property is being reported correctly, and including all of their personal property. And a lot of times they are finding some either omitted personal property or undervalued. So when that happens and you get the notice to do the additional assessment, the company's going to report that to you. You're going to add it to the tax duplicate. The tax rates used to calculate that additional charge are going to be the same as the year of the additional assessment. And you're going to enter it into the same taxing district as if it had been there back then. Now, you can't apply penalty, even though, let's say that it's for a 2011 assessment. They've never been billed that. So when you put that additional charge on, you're not going to add penalty yet, because they've not been given the opportunity to pay that bill. Now, if they don't pay it, and you go past your collection date and they've given their 15 days notice, then yes, you would apply penalty to that, and it would follow the same penalty rules. The treasurer charges the taxpayer the proper amount of taxes. They're going to post those payments just like they do any other property tax collections, but they also have to track those collections on the omitted and undervalued property. Then at settlement, they're going to certify the taxes that were collected just like they do any of the other property taxes, but they're also going to provide you a list by taxing district of those collections. Then if this were June, in June settlement, you are going to treat those collection amounts the same way as you normally would with any other property tax collections. And on the forms 102 and 105, up in section A, on line 7, it's a pre-apportionment adjustment, and you're going to reduce the apportionment by that amount that the treasurer certified to you by district, then that money is actually at settlement quietus into the personal property assessment audit fund, and the amounts have to agree back, of course, with what the treasurer certified to you. Then in December, once again, the treasurer's going to collect them like any other property taxes. You're going to report it just in the same manner as other property tax collections. But in this case, it's going to be a line 42, pre-apportionment adjustment, as a reduction in the net tax penalty and interest column. It's a reduction in the amount that you're going to apportion, and once again, that money is quietus into the personal property assessment audit fund. We suggest that you have a separate fund for each contract. Some counties opt to do a new contract every year. So for an example, we've got an example up there. If it was for assessment years 2010 through 2012, a good title might be Personal Property Assessment Auditor Tax Collections Funds, 2010 through 2012. That's going to help you balance at the end, and it'll also help in balance and properly accounting for the cost of the contract. Out of that fund, you'll be paying the contract fees and any other costs associated with the contract. And then at the end of the contract, once all the costs and fees have been paid, the balance of the fund, which you hope there is some, is distributed to the taxing units at December settlement. And I want to double check that because I think it might actually read at the next settlement. So we'll double check that. Okay, so now you have a balance in your fund. So what you need to do is you want to distribute that money. So you're going to total all, by taxing district, all of the county treasurer's lists received during the life of the contract and determine that total. Then to determine each taxing district's percentage, you're going to divide each taxing district's total by the county total, find out what percentage that is of the whole, and then make sure that your percentages come back to 100%, and we recommend you go out 6 decimal places. That ought to help with the rounding issues. Then, to determine how much goes to each taxing district, you'll take their percentage times that total. You'll add up each taxing district amount that you just calculated and make sure that the total comes back to that fund balance. And then you'll put those in December settlement apportion on line 42, but this time it's going to be an addition to your apportionment. You're going to write a check to the treasurer from that audit collection fund, and the treasurer's going to post it to the cash book. And I'm not sure, they could probably break it down by district if you provide that, and some treasurers like to do that, or they could really even do it as a line item. Shouldn't be a problem. Now, what happens if the company finds that they've been overcharged? Your taxpayers have been overcharged. Well, then they're entitled to a refund. And you're going to process that the same way you would any other tax refund for personal property. You're going to do it on a claim form 17T, and then it'll be included in your 17TC in the next settlement. And I know we're rushing through this because last time I went over, so I'm trying to be good. And just to let you know, we discussed the memo that has been sent out in the past, which was several years ago, and we're going to get it updated and try to get it out to you by the end of this year or early next year. So you'll have some good step-by-step instructions, okay? Okay, the other fun topic, late payment penalties on special assessments. All of you, we had out on the website, on the Board of Accounts website, this illustration of the cash book or in the 49TC, and we found an error, so we issued you a new one today. And, you know, that darn Dan, he finds those things all the time. So I want to make sure everybody has one of these, one of the new ones. We tried to make sure we had plenty of copies. So if you don't have it, just raise your hand, and Brenda has them. She'll bring them around to you. Okie doke. Well, the late payment penalties on, and sometimes I think of this as certain special assessments because it's not on all. It's distributed to the taxing units with the property tax settlement and are included with the property tax quietus, okay? Because this is added to the apportionment. So when you're processing your settlement, it's already included in what you're doing. And, you know, the treasurer certified these amounts to you in Section 3. So you know, and you've added it to your 102s, and you've apportioned that money out. Well, the treasurer needs to move that tax collection amount because she's had it down in the lower section or other sources section of her cash book. And just as a side note, if you aren't familiar with the cash book, it would be a good idea to get a little familiar because sometimes you all get questions about how, from the treasurer, well, how am I supposed to do this? And I know that sounds silly, but you know, in the world of harmony, we hope that everybody works together, but reality is that doesn't always happen. But it is a good idea to understand what the treasurer has to do with the money. And we did do a presentation in August at their conference. Brenda, I think, did the presentation, or Dan, about how they're supposed to move this money on their cash book, okay? And I'm sorry, I know I keep saying okay. So if you look at the form, and I'm not going to pull it up because the print's really small, but you'll see that what we did on our sample is we took the amount from the late assessment penalty on special assessment lines down on the cash book, entered it in as a minus in the day's collections, and moved it up to the tax collections portion. So the net result is, of course, 0, but now it's up in the property tax collection, so when you do your quietus for settlement, that money is already there, okay, on their cash book. And that's really all that takes. You will, I lost my place here. Oh, when the treasurer moves that up there, that's what I wanted to say. When the treasurer moves that up to the property tax section, they have the amount by taxing district because they provided that to you. So they can put it as line by line.